It's a black man Sunday. Time to put all childish things away. I refuse to be the man I was yesterday. Gotta put my best foot forward and elevate.
It's 2025 now. People filing their taxes and all. Let's talk about the contribution limits and all that good stuff for 2025.
For 2025, there hasn't been any change with the IRA contribution. You can only contribute again $7,000, right? So you should be working towards fully maxing out the IRA so $7,000 for people under 50. That's $583.31 per month. Now there's an additional $1,000 catch up for people over 50, and you can contribute $8,000. That's $666.66 that a person over 50 can contribute to an IRA. Now on the 401k, 403b, 457b, and thrift plan, the limit is $23,500 if you're under 50, and if you're over 50, the contribution that you can make is 31 grand. And so there's a new component of the Secure Act that allows older investors to contribute even more. So if you're 60, 61, or you're in your early 60s, it doesn't say your early 60s, you can contribute a max of $34,750. So there's also income limits. The income limits did change. So with the income limit on IRAs, let's just be more specific, you can contribute the full 7 grand if you're modified adjusted gross, if you're single or filing head of house. So the modified adjusted gross, if you make less than 150,000, you can contribute the whole 7,000. So it starts to phase out once you hit that 150 mark, and then you contribute less and less until you reach 165, and then you're no longer eligible to contribute towards an IRA. As far as a married couple, you can contribute $7,000 if your modified gross income is less than 236,000. Once you reach 236,000, up until you reach 246,000, it begins to phase out. But at 246,000, you can no longer contribute to the IRA.
It's tax season. I don't know if this is a question for you or an accountant, but I'm just saying my question is, what can I do because people say, well, if you want more money, just file 0. If you file 1, you're going to get less money back, but then you'll get more on your taxes. But what can I do to minimize where, because I feel like I'm getting a small percentage of my money back from the taxes. Like I think I read somewhere that says that you pay 40% to taxes, but you barely get 10% back. So are there any tips and tricks that you can provide us with where, we can get more money back?
Own assets. Particularly real estate. There's a lot of write-offs if you own, right? There's the interest credit that you can get or deduction. Make sure that you're contributing as much as you can to your plans at work and contributing to your IRAs, right? If you contribute to a traditional, there's deductions on the traditional side, not necessarily on the Roth side. So those are things that you can do. But I found that the worst way to be taxed is at ordinary income, right? And so you have to own property, or own a business, or invest. And those are the ways that can really reduce your taxes. Else, you're at the mercies of the Trump tax deductions and things that Congress puts in place to help the middle class reduce their tax burden.
Got you. A lot of business owners listen to the show.
Yeah.
So let's say you own an LLC. How is that LLC gonna, give you more money on your taxes for the brothers that don't know?
How's the LLC going to give you more money on your taxes?
Yeah, because you said, own real estate, own a business. So you
Yeah, on
have
a
the
business.
LL, yeah. So
Say for instance, you're a 1099, you could contribute to a like a SEP, right? And that further reduces. You can have your regular 401k, and then you can have your SEP IRA that further gives you deductions on your tax return. So you're say for instance as a 1099 person, you're making a lot of money. That's a way to reduce your tax eligibility. So you either can pay yourself through investments, or you can pay the tax man.
Just more of another statement. More, more about what you said, Corey. Like, I think people should not. So definitely. So do this. Definitely employ whatever strategies you need to employ to ensure that you're paying your taxes, the right amount of taxes, not more taxes than what you owe. But I would encourage. This is just my own personal point. I would encourage us not to adopt an attitude that we hate paying taxes, because taxes actually pay for a lot of government programs that help a lot of people in society. And so a lot of those programs that we say, are there to support minorities or there to support other people, those programs are paid for with tax money. So if all of us decide we're not paying taxes, those programs, as we can see, will be the first programs that are going to be cut. And so the idea is, let's all pay the proper amount of taxes that we're supposed to pay, you know. And like I said, I'm not opposed to anybody employing any strategies that will ensure that they pay the proper amount of taxes they can pay. Understanding that if you're creating a business, what you're really doing, and I think we've had some excellent people on the show come across and say, if you're starting a business or you're running a business, what you're really doing is you're creating value for other people. And that's why you get a tax break. You get a tax break by creating value for people other than yourself. So taxes is one way for us to ensure that everybody in our society has the services they need so that they get an equal opportunity. And another way for us to also serve society is by starting a business and creating value for other people. And we get a tax break to do that. In other words, the government encourages us to create value for others. And so I just wanted to point that out. Didn't really have a question, but just wanted to make a statement. I didn't have a question per se. Nelson, if you wanted to add anything to that, be my guest. But I just wanted to make that because I hear too many things on the show where people say, "Oh, I hate paying taxes." It's like, yeah, I mean, nobody likes necessarily making a sacrifice for others, but let's put it in the proper perspective. It is a sacrifice we are making in our income
Mhm.
to ensure that society is properly supported. And as we can see, if certain things are affected, that affects us all, that affects our security, that affects our safety. And so we need to keep that in mind as we're adopting these strategies to ensure that we pay our proper amount in taxes.
Absolutely, absolutely. That is a consideration that one should take in. The ramifications of not having enough in the coffers. Um, Most of the programs are funded through taxation, are funded through taxation, and making sure that they're properly funded. Everybody should pay taxes. So
Okay. All right. Well, I'm
there we
I'm still I'm still in my feelings right now. I want to talk about this oil, man. Above $74 a barrel. I went and got gas this morning. I barely put $35 in. And I barely got a half a tank. I'm like, man, what's going on here? I thought Trump said he was supposed to, because a lot of us voted now. Stop acting like y'all ain't vote for Trump. I mean, I didn't, but I know a lot of brothers that did. That's come on this show and had debates and everything. But I'm just saying, the barrels is up. The inflation is still up.
Yeah,
I honestly sitting here like, man, I feel like I'm just blowing money, man. What faith can I have with this? The barrel, the oil still going up. So that means my gas is still going up. So I'm just saying from a financial perspective, who's someone that's trying to, like I said, I'm still in the accumulation phase, but it's hard to accumulate when the inflation is eating the
well,
regular money. I'm like, man, I used to do boom, boom, boom for this
yeah,
amount. Now I'm pretty much triple that. I mean, eggs was like $10 for one carton. I'm trying to get food for the Super Bowl. I'm the eggs 10. I want some deviled eggs, but I ain't about to pay no $10. So that's what I'm
right.
saying, man. I'm just saying, like, but keeping it in perspective and talking about getting back to, the preservation and the distribution phase for our brothers and sisters and that
Mhm.
55 and the 65 up, they're feeling it way worse than me, especially if they already retired and they're getting that 70% income. It's like, how do you live comfortably and not think about going back to work? Because that's what I'm seeing this on a
Right.
daily, man.
So those in the that have already retired, right? And that's why it's so important. And when I see when I'm sitting in front of my clients, a lot of people having to work longer than they should or want to. It's very important to make the necessary sacrifices if you can. And I know it's very, very hard to make the sacrifice you can, because one day the game is over, right? And that's it, because there's a time and a place for everything. We're not built to work forever. You just can't. And so for them, it's, like finding creative ways to, like, for my clients, like, if you own a home, well, you own an asset. So you may not have accumulated it in, like, let's say in the stock market, but you have an asset that has equity. And sometimes you have to use that equity to fund life if you don't have enough money coming in to fund, the basic necessities. So you're not at a total loss. It's just, what are you willing to do? Right? There's things that you're just going to have to get creative in the way that you look at finance. And then on the flip side, if you're on, in the wealth accumulation phase, it's either increase income or decrease expenses. And then it's just like, well, what am I spending my money on? And it's just like every little bit helps, right? So I'm like kind of like a fundamentalist. So do I need to go out every single week, every single day? I mean, you'd be surprised how much money you can just save, make it automatic too, but just save by cutting out, eating out, and then using that money to buy assets, to buy investment dollars, because it's going to add up, because there's a thing called compounding interest. And over time, it doesn't look like much in the beginning, but over time, you check your investment accounts and you're like, oh wow, I'm glad I made that sacrifice. I didn't need that $20 per day lunch, right? So that's a lot of money. Like, start thinking, what can I cut back, right? Don't just totally cut your life out. There's some advisors that say eat beans and rice and rice and beans. I don't necessarily believe in that, but I can cut out a meal. I can cut out eating out one time a week or a couple of times a week, and then really jumpstart my wealth accumulation.
Gotcha.
And not
Okay.
saying like put it in the bank. You do need to have liquid savings, but start putting it into an investment account where you can invest in the market.
Gotcha. Okay. And well, I'm gonna ask you the hard question, man. You enjoying yourself on Black Men Sundays, Nelson?
I always do. I always do.
Yeah, man. I was ready for you today, man. I can't wait to see Nelson.
Oh
I'm
yeah.
I'm emotional too. Oh, man. And then when I left that gas pump, I was like, okay, yeah, we're gonna have to talk about all this. But let's
Yeah.
talk about the market recap, as far as like the Federal Reserve and all. Let's talk about that
Yeah.
too a little bit.
Okay.
Yeah.
What's going on with the Federal Reserve, as in, um,
As in, the rates not getting cut in January. Let's
yeah,
talk about that first. Yeah.
like I kind of alluded to, I don't think that they should, because it is truly a weapon or a tool that they may need in case we go into a recession, right? That's gonna happen. It has to happen. That's just part of business in cycles. There will be another recession, right? And so the jobs market is good. The economy is pretty strong. We may see what happens with these tariffs if that remains the case. So there's no reason for the Federal Reserve to reduce interest rates. And then when you look at interest rates and interest rates on home loans and things of that nature, this is norm since they've been tracking it since 1973. Around 7% is the normal. Now, what isn't normal is the cost of houses. And what has happened is we just, there's not enough inventory. So there's a supply gap, right? And so that's what's kind of driving up the houses, amongst, other things that, investors that are not people that are going to actually live in houses, that are buying houses for investment purposes have driven up the prices of homes as well. So you've got a lot of things that are coming into play. So we have to keep, when we're talking about high interest rates, we have to keep it in perspective. It's high as in compared to what? We don't have the interest rates that they had back in the 70s. Excuse me, not the 70s, but the 80s that were double digit. So we
Yeah,
don't have.
but the houses were like $125. I mean, 125,000 too. You may have had a
That.
15%, but you may
Yeah,
you
but
know
that is true.
125.
But that is true. But one thing that we know is that, I mean, you have to always account for that it's an asset, and assets, appreciate over time. So that's what I see with the interest rates. There's no need to cut right now. There may be some people on the call that have different opinions. Trump wants it to cut because it would be good for companies because they have to go out and borrow money just like we do, so that they can do their business more efficiently and cheaper. But I just don't see it happening. I don't see it happening, and I do believe that Jerome Powell should stand firm and not be bullied by Trump.
I got one more, then I'm gonna let you ride. Then I'm gonna ask you if there's something I didn't ask you because I'm sorry I got a little emotional today, but I'm looking at
That's
my
fine, man.
my
Yeah,
my
that's
money looking a little low, and I'm sitting here. I ain't even bought nothing. I can see if I went and bought some Jordans and bought some cologne and some fly stuff. I'm like, I ain't even
fine.
bought nothing, and I'm broke. Like I done shopped it up. So what I'm
Yeah,
saying.
yeah.
But yeah, so I
Everybody's
apologize for the
different.
emo. I know you never really seen me like this, man. I'm just this is some different stuff, and then every month. I'm sitting here like, oh, that's coming out too. Oh man. So it's like I'm just taking daggers to the chest, man. And I got to eat it. But I'm
Everybody's
just
feeling
saying,
pain.
yeah. But what I'm saying is, for me, I can take it a little bit. I might get emotional, but I'm straight. You know what I'm saying? Versus someone retired, like my mom retired. That 70% is a little different now with that inflation
Yes,
and all. You know what I mean? So.
absolutely,
Yeah,
absolutely.
man. So, but before I let you get out of here, man, we need some, for 25, as far as, because I know with me, I always have the conversation with you about, okay, should we still do the group stocks, the individual stocks? Should we do that ourselves? Should we? And then brothers are still asking the question, we can do it ourselves. Why do
Yeah.
we need a financial advisor?
To answer that last question, to govern emotion, because usually people do the wrong thing at the right time. And what I mean by that is most money is made in turmoil, right? When things are down and bad, right? That's when most of the money is made. And so it's to keep you, it's like accountability coach to keep you from making the wrong decision, right? Because once you sell those shares, you have taken that paper loss and you've just realized that loss. Like I probably said many times on the show, like in real estate, who cares if my house drops 20, 50 grand in value? The only time that matters is when I'm going to sell my home. And so I believe that everyone should have an advisor just to govern emotion, because when you're emotional, you can't think straight. And a good advisor, is going to be emotionless, right? And even if he is scared, he knows enough, or she is scared, they know enough to stay the course, work the plan. The market always goes back up. We have historical data that say that it usually returns 7 to 12%. And we just got to go based on that, even though it may not look like it. That's what it has historically been. The modern day stock market, since the enact of the SEC, like we're referring back to regulations and stuff. That's what it's kind of been, 7 to 12%. So you can kind of bet your bottom dollar if over your investment career, that's what you're going to get on average. Now, do some people get better? Yeah, they absolutely do. But that's what you can almost depend on if you just follow the market. And then the second part of it is, if you're going to do it yourself, the way to cut out a lot of costs is just to buy the market, buy one of those index funds, and just follow. If you're going to do it yourself, and then you're going to be okay. You're definitely going to be better than if you left your money in a savings account, because right there you're at a loss because of inflation.
For the brothers that are like, well, hold up, I'm still in the accumulation phase. Y'all kind of took care of the elders. The young folks, they don't know what elder is. They still babies. But I'm just saying, like, if you're in that wealth accumulation phase, is there any new, in 2025, are there any new tips and tricks, any new, plans, I guess, to maybe accelerate? Because I feel like that's what I'm seeing a lot is people are they're trying to accelerate the wealth. And I see these different, try this plan, try that plan. So I'm saying from a
Mm.
professional point of view, from a budgeting coach's perspective, from a financial advisor's perspective, with over 2 decades of experience, are there any new tips for the young brothers and sisters out here that are like, okay, we're doing the accumulation phase, but because I know last year when we talked about the everyday millionaire, you had a couple techniques that people kind of locked in on. So, is there anything that you have this year?
For me, it's the tried and true. Wealth accumulation takes time. You're talking about 20 to 30 years out, right? And so these younger people have to understand that thing is not instant. It takes time. It takes time to build your career. It takes time to build a great marriage. Anything worth having is going to take time. There's no get rich quick. And if it is a get rich quick thing, it's probably a scam or a scheme, right? And I'm not trying to say that crypto is like that, but there are a lot of bad actors out there, right? So you have to be careful, right? Is what I'm investing in regulated? That was a very good point that the gentleman brought up. Is it regulated? And if not, you should stay away from it, because if there is a substantial loss, you'll lose all of your money in that scheme, and then you're back down to zero. Whereas you could have had it in an index fund or something that's less glamorous, less sexy, and been fine.
All right. Well, there we go. Nelson Simmons III, man. Thanks for coming back on Black Men Sundays.
No
If
problem.
people want to contact you, I've never had a financial advisor, or I want to get rid of my financial advisor and I want Nelson, because I drink the Kool-Aid over here. You know what I mean? Like if you on here, I invest with you. You know what I mean? Even though I can't log in, you got to still get that login for me. But I'm just
I,
saying for people that want to contact you,
I
that
told
want to
you.
link up. Come on now, for people that want to link up with you, that believe in what we're doing over here, how can they contact you?
One of the main ways is to just contact me through Instagram at M3 with NS3. Yeah, that's my
Okay.
handle.
Okay,
And
cool.
then
All right.
I'll be sure to reach out to you.
But Nelson Simmons III, man, thanks for coming on Black Men Sundays. We appreciate you. We appreciate your time. And
Absolutely.
enjoy your week, my man.
You as well. Thanks for having me.
It's a black man Sunday. Time to put all childish things away. I refuse to be the man I was yesterday. Gotta put my best foot forward and elevate. It's a black man Sunday. Time to put all childish things away. I refuse to be the man I was yesterday. Gotta put my best foot forward and elevate. It's a black man Sunday.